Hello, welcome to another educational stream of ES Futures Trading. It is Thursday, March the 6th, 12:29 a.m. I am 1 minute earlier today to compensate. I was late 2 minutes in the morning. That's a really bad joke out there. Um, you're supposed to laugh at that. Okay. Um, I got this. I got this market. We were coming from a day from yesterday. We were talking about how the odds were in favor of a sequential trade today. There is a but before getting to that, before uh, we have to have a market understanding what the market try to be in sync with the market. Now we have a high, really weak, poor high here, weak, poor low here, weak, poor high here, weak, poor low here. So double, right? The overnight and the daily. And it play out first for the overnight inventory and having the market. Um, I'm going to explain in a moment what these lines are. Better, I'm going to close this one. These are not needed anymore. Um, Having A high, where was A high? Oh no, B high. My bad. B high was almost. It was exactly at yesterday's halfback. A I believe was close to POC. No, A was not. This one was the market. It was the tail. But this is an extremely hard day for me at least. Market information, market generating information is there, playing the odds. But look at how this market was bought again. Yesterday was bought for 4100, and today again bought for 4100 one, two, three times close, the closest to the 4100. And then we have a breakout, right, coming back to repair this high here. And when E started, of course, you are going to have a selling coming back again to 4100, right? And that's when the market got you, right? Traders were selling this market. And POC was down here at the time, but it was really easy when the market didn't close this, didn't come back to this range, it didn't close this, because it would mean that the POC could be along this D here, anywhere around here. But the most important thing was this high, right? This high. I was playing these calls here, but it was really hard, really hard. I have to say that the market really tests you. You test your convictions here. I let these calls go when the market actually took this high out. When the market took this high out, I let those calls go because I saw that this was a really high. I consider this be a really high risk market, um, especially coming from this having this kind of lows. Also, the other thing here is, this is the thing, right? This is market generating information. Here you have a range. You have a range here. You have 1, 2, 3, 4 day range here. We're going into a long weekend. What were the odds that these traders, the traders want to go long over the weekend? There was some rebalancing on inventory here. Market getting too short in this 1, 2, 3 days, getting short. Um, and now it just caught. Can you see how the market caught the shorts here? Even though the market is really long and has a really bad structure, it captured, it trapped shorts here. Now, yesterday we have to remember what happened. Yesterday was a horrendous day to the downside. Horrendous, a really terrible day. And it was painful, really painful to see the market uh, coming down yesterday. We highlight this in the morning. four ranges forming, to profile has a weak high and a potential for sequential trade here. This is just a potential, just odds of having a sequential trade, nothing else, right? And the structure of the market, highlight the structure of the market, the lower side is very weak, all the way down. For me, it's all the way down to the 3900. Okay. Um, I didn't write too much yesterday on my homework. Okay. Now this high has been repaired. The market is back at the center of the range or the weekly range. And what bothers me right now is this level here, this one. I'm going to put this in red because it is very unusual that the market leaves this single print here untouched. Usually, that's usually, I'm not saying that's going to happen, but usually the market, when the market does this kind of things, these single prints here, the market has a rally here, continues to go to the upside, comes back, repair this, revisit this low, give us maybe 2 or 3 ticks to the downside, whatever, and then continues this rally. Right now, what I see is a market getting very, very long. That's too long right now. It's too long. This high has been repaired. So the reason for this rally is down. The trade is down. You know, because we have a potential sequential trade in the overnight market, repairing these high spheres and then coming back to repair this one. What was going to happen, Fitz? I don't know. I didn't know, right? But the trade was once one trade was done, the potential was to the other side. When the market took care of this low first the overnight, it opened inside previous day range advertising, which advertised chop. The market got out of the range, which is the exception, but the conviction was not there. It was a market without conviction. The other thing, the other sign here, which was a positive sign for the market, was the market re-entered this previous range. When the market re-enters, has a breakout to the downside, the breakout is rejected, the re-enter the range, it targets the opposite side of the range. Now we have two things now. We have the potential of sequential trade. We have a market re-entering the previous day range. We have a weak high. What was a weak high? We didn't have a weak high at this time, right? We still didn't have because that was B. B gave us that weak high. It has a break, was bought many times. This is something that I need to work. I have a lot of work to do in this. I tend to focus on reasons why I shouldn't go with the trade instead of focusing on the reason why you should go with the trade. Okay. Now I am looking like a fool, right? Gosh, man, why you let it go? What I let go my calls? Right. I saw the risk was high having this kind of loss here. Right. That was it. That's because my trade was aiming to this, but coming down here, where repairing this high here from yesterday's was the only intraday week in the upper side, right? The potential was down here, but I decided to let it go. Of course, as soon as I let it go, the market keeps going in the direction my trade was. But that was it. And then I know that in the long term, I'm going to be fine if I keep doing this way. Um, Now, what bothers me really, really is this single print here. I think this market has gotten again. It's got too long. We still have the other thing here is, believe it or not, we are having a trend day. Not a single time, not a single time the market has took the previous period low out. Look at this. Low, higher, 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 higher. This is a trending day to the upside. If we have a trending day, why I would, it is obvious now, right? But it was really hard down here. Why I would like to go against the trend, remember? Remember what a trending day is. If you have a trending day, you have a trend here. You got a trend here, right? You have a trend going. No, this is the trend. Uh-huh. This is the direction the market is doing. Why I would like to be here, standing in front of this? Or why I will go short? Why? It doesn't mean I cannot go, but if I want to go short, I will need to wait for an opportunity. The market to show me what is this. Now, something here is happening. Notice this, right? Notice this. What can I get from this market? Notice how the higher that this market goes, notice how how much the volume decreases. The volume keeps going lower and lower. Right? How much is this? Maybe 7, 10%, 10% lower? Let me check. Uh, I was watching Jim's webinar from yesterday. Um, but, oh no, resources. Come on, 12%. Markets keep going higher and volume is decreasing. Can you see? Volume is decreasing. The higher the markets go, the lower the volume we have. So these loans here are high, are really having high risk in the low side, in the loan. Particularly, I don't know, I would go ahead and mark this just as a reference. Not that I don't like that to remember because it is easy to forget, to forget, to forget one. Now, in this day, which is what day is this? It was Thursday, Wednesday, Tuesday, right? We have some liquidation here. No, we were talking. I guess we talked. Yes, we talked about it. How this could look like a liquidation. This one, this day. Remember when we talk about this day that it has the shape of a knife. This is the handle. Whatever. I call this a knife. This, when the market is points to the upside, and also remember, remember this. The market make a new high, but that high was made in the overnight. Um, it's not rare, it's not unusual. The market comes back to check this one out before. It is not usual for the market having a break, leaving this kind of highs made in the overnight. Remember when we were talking about also gold here, right? Oh, 3 days, that's good. Now, this high gold was made in the overnight. The market has this market has taken this one out, and now it's being used as a man. I don't know. It's going to be used as a support. I don't know, but I can see as a break here. There is a buy from this high that was made in the over. This is usually the markets are rare that leave this kind of highs. And when the market makes a high, it's also unusual. The market makes only one high. Usually, markets make high after high after high, many times, multiple times before trading or trading in the opposite direction. We have this high from the overnight. Now, why I did my calls go? God damn it! Evan. Now, upside continuation has this triple high from. Oh boy, I forgot about this. Oh, okay. Can you see how the market tests your convictions? right? This low has been repaired, but when I was doing my evaluating my trade for upside continuation, I completely forgot about this high here. Now it's obvious, right? We are right there. You can take the market can take this one out, but go ahead and keep your calls out there or whatever position you have. And the risk of this rally also, man, I don't like this lows here. And I was bought from 4100. It was bought again from 4100, and I was underwater for a good amount of time. What kept me, what kept me in was that I saw the market the previous days, right? In this day, this very far back, we have this high volume at the closing of this day. Once the market took this high out, this area out, it never looked back. Then the next day, on in this day, the market gives us another high level here, really high volume in this area. Remember how we talked that a weak market doesn't do this? A weak market doesn't cannot come in here and close above this previous high, this previous period high. The following day was a terrible market to the downside. And today we are checking, the market is checking all this again. You know, it's checking this very high volume from yesterday. This one again, could it could, I'm not sure if this market could come back all the way up to here today. That's why I have this. I am starting to use these histograms just to have an idea. A better reference when the market is in control by when the market where the predominant force or the forces dominating the market at any given time are the shortest time frame traders. I believe that is what's happened yesterday, and I believe that's what's happening today as well. The reason being is who buys, right? Who buys exactly from these levels, from this reference down here, 4100, 4100, 4100. Mm. And I have used these lines that I have in the other chart as well as the levels where the market has these really high volume here, high volume here, intermediate, some buying here. You can see how much buying, no, how much trading happens here, no buying. Now I can say buying, right? It could be selling as well. These are cut short, but it's very rare. It's very rare, that sellers. You got sellers here, but big sellers. It's very rare that somebody would short this market having having a long weekend. You know, Bigger traders are usually more sophisticated traders than short-term traders. It is it is a full enterprise to try to guess what these kind of traders are doing. I am not in the job doing that. Right? It's just a waste of time. You will be able to see that after the fact, never when this happens. You can see volume here accumulating here. The next cluster volume comes up here. Not too much here. Can you see? Not too much here. There's some big selling here, but only once, very scattered, and then boom, comes again. And usually when I got this kind of action, this usually signs the ends of the action, or whatever the direction the market is going. If I don't see this one here yet, it could mean until I see something like this, it could mean still the market could keep going higher. Why I let my calls go? I guess what I saw here. Oh, what I saw was this level here. This level here was my reference. You know, I got a spike here. This was a big spike to the upside. I consider the risk of being long here was greatly. It was low. It is high here, Up here is even higher. So that's why I let it go. Um, Again, I'm looking at the fool now, right? Why you let it go? Now, I have this high volume here from this day, right? Um, what are the odds, right? The next, what is the next high volume here? What it is? I could not call this one because this could be this longs, you know, being forced to liquidate. So these ones are not here anymore because the market, can you see how long the market has traded below this level? Those ones are out. So what do I have on the upper side? I still have these ones, this one maybe, and after that, I need a strong buy in here. Notice how the market dries when it comes to the downside. Dries when it comes to the downside. Kind of like curious here. I remember this period here. This period here opened, or I think it opened somewhere down here, and from here it just got high. It got high. It didn't test the lower side. It's not like this that the market come down here. No, no, this one also was the same way. It opened here and got really higher. This one, it came down, right? You remember it came down, it dries here. But the market open here keep being bought. Open here keep being bought. Open here keep being bought. And where is my chart? Okay, where's my monthly chart here? Daily, weekly. Okay, we were talking in the morning about how 4080 was support here, based on this level here from the weekly. Okay, we were telling also that this market, if this market doesn't come to the downside towards this low here, because there is absolutely nothing holding this market. There's nothing here. Can you see single prints here in this market? There's not. If the market cannot take these single prints out and close the gap, no, that was a long as well. But it's very hard. It is incredibly hard. It was incredibly hard to keep these calls out there because I was underwater for a while, good maybe like 2 periods there, 2.5 periods. My out was a 4100. As soon as the market comes down to 4100, I was going to load. I was going to take the loss, take a loss on those ones and close my trade. Very risky as well. It's very risky trade. But the thing is, when you those calls were very cheap, were around 2 points each, right? And the market could come down. It come down all the way down to here, right? If you check this movement from 141.10 to this it is 10 points. It is 10 points. Only one future. If I trade futures, right? If I got calls, it just drop 1 point. And not times the calls you have, right? So it's not that much actually, relative to compared to having. It would have been a lot harder to hold this position with the straight futures. Really hard to do it. These markets are extremely dangerous. Um, if you have time, even if you don't have time, I strongly suggest you to make time and check this webinar. Check this webinar here. It's very good. I have decided to not to be live, not to be live in when Jim does his webinars, because I have an opinion of the market. I mean, it's not unusual that I have bias. I have biases when I listen to him. All right. I get second thoughts when he sees the markets in one way. I see the same market and I have a different opinion. But it is because we are different people. We need to understand also that we all can have different opinions on the market and we can be right. we can be right. Um, how that can be possible is a question, right? And that comes. The answer to that is that when you get a market understanding, you got self understanding. The moment you build your strategy, all those things play a role when you build your strategy. You can be a seller. You can be a seller. You can be a seller up here. You can be taking profits up here. Of a long position. But it all depends on what kind of personality you have. That's why I don't call trades because it tends to influence you. It may influence you. And I have said this many times. I do this stream as a way to keep myself focused in the market. It's very hard to be focused with the market. If it's too hard, my job, being focused in the market becomes my job. And if my job is to be focused in the market, then I am not trading. I am working too much on something. I don't know if I am explaining myself. Please let me know if you are talking too much on this. If I am talking baloney here. All right. Now we have a long weekend looming in the horizon here. This low is, oh, it catches too much my attention. I'm just going to put it there. Not to forget about this fingerprint is, no. I think the market come back to check this one. But notice this. Coming back to check this to repair this single print here, actually risks the cessation of the trend. Remember, we have a trend market going to the upside. When the market comes down here, at least it takes the high, this high, maybe this low, a couple of ticks, this will be over. Now, have in mind also that it's not unusual that the market does some kind of rebalance. If there is something to the upside, there's some kind of rebalance. There could be some kind of rebalancing here, so the market can keep going higher. The market is, to me, is getting too long. Has got too long again, right? We still have this high here from the overnight of yesterday. Mm, Notice how I cannot make this up. This level has been here since when? Since I guess since the last since the last day of March, and we got that high there when we may what happened we make this period this range we took this range and held back or this range that's how we got 41.32. And we put that one as a potential destination of this trade on this day. Right? And again, well, markets are irrational, but are irrational in a predictable way. That's the craziness of the market. Can you see where this is stopped? How come that happened? Now, who sells from that as well? Do you think these traders that are here, that are buying exactly from 4100, the very short-term trends, the momentum traders that join the movement, I don't think that they could see that high. These are for more sophisticated traders ever. Now we are about to close this period. Less than 2 minutes. We are inside on the lower side on this day. On this period. This market could target this low here. The high has been repaired here. This high has been repaired. The non-access high is history here. Notice how volume dries here. There's no volume here. Volume dries. It's coming down, but no volume is coming here. This high has been taken out. This is the current high. Some of this volume. Okay. Now, if there is something to the upside, the market will keep these distributions open. The market will form a distribution with the upper side if there is something to the upside. Let's see the market. Can you see how things change here? The market has higher odds now. It is one thing repairing this single print. That's the I saw here when we have F here and another one 2 periods later. Very hard, Mark, very hard. To me, the odds are switched now to the downside at this moment. I am flat. I am not telling the market is going to break. But the odds are high, are increasing. Please let me know if you have any question. You think this helps? Just let me know. Unbelievable how this market stops right there, man. This has been a very painful market, very painful day as well, but painful day to watch. And I just very short-term traders here in this market. Now, take a look at this. Can you see what POC is? Well, this low is POC. God. It's just, I'm not saying the market is going to break, okay? That's not what I'm saying. I'm saying the risk here, the most important thing to me here is the risk, that risk have increased. It is. It was risky. It was very kind of high risk being long this market from the previous rally, and I believe the risk is even higher now. From the intraday, from short-term perspective. I've noticed that this stream is live, but there's a lag here in this. Oh boy, look at that where the selling is coming. You know, it came from halfback here, not of this halfback, but from the weekly for the upper range, for the center of the weekly upper range. Now it's coming from this halfback by. There's just short-term traders in this market. And the risk here is that we try to upfront, right? If we try to have from this, we talk about this also in the morning, right? When we have distribution curve, if this is trading, if you have an opportunity in the market, most of the money is made here in this area, which is the 70% of the value is here. This is innovators, early adopters, could be here, for example, right? This area, early majority, late majority, and laggers. This part could be going on now on this trade. Remember the sequential trade? First the market was going to take the lower side, and then the destination was the potential destination was the upper side of yesterday's, this high. This that part of the trade could be here now. Now there could be another trade here. Now taking these longs out, all this market that was there's extremely long. That could be the next trade here. It could be. I'm not saying it is. It could be maybe this part of another trade. There is still no cessation of one time frame higher here. The market is still to the upside. It was bought mechanically from the low, which is high back of the previous period. This I saw is still there. I don't like this. I don't like this. I consider the rest of the big long extremely high here. Um, But it could be the early stages of this could be my God, this could signal the end of the action to the upside. We have excess here. We have excess here. Not, I guess, not too many traders, or at least short-term traders, are aware of this hallback. That this is the hallback of the range of the upper range in the weekly time frame. The weekly time frame, as you can see, hasn't changed. We still have this market is still to the upside. This market can end tomorrow is holiday, I believe. Can end very close to where it opened. The market has gone nowhere. We still have this upside, and the market, if it closes here, it will close it where it opened. Nothing has happened. Nothing has changed in the weekly. The market not even get close to the breakout level here. One time frame lower here. Can you see 1, 2? It was 1, 2. It was a 3 today. The trend to the downside has ended here. So there is no more trend to the downside in the daily time frame. That was over. Okay, that is over. Remember that. That is over. What can happen here, we can have, and the potential here now is is this going to be an outside day? To be an outside day, the market has to explore the lower side, and close it above a previous day high. Yesterday, this is not an outside day. The market explored below the yesterday's previous day low, but closed inside. Keep trading. The trade keep going to the downside, and you can see what's happening now. Well, this could be an outside day, very well an upside day here. Outside, no upside, upside day. My bad, outside day, outside to the upside. Hmm. This contradicting information that we find in the market, uh, one uh, one information telling us something, another piece of information telling us something else. This is usually happens because we are reading information from different time frames. Okay, we are reading information from short time from the intraday and comparing this information to daily time frame charts, weekly or monthly. But when we read these kind of things, it is when we have this contradicting information, and sometimes that can lead to That can lead to paralysis as well. You know, cognitive dissonance. You know, we find contradicting information and we just, choke there. We don't know what to do. Remember, the trend to the downside, to the upside has not ended here. It looked below, but it doesn't end. We need at least one more tick here. One more tick to the downside. Coming one more tick, that's the end. Still, this market is to the upside. Technically, it's still to the upside. Oh boy, trading is very difficult. Whoever say trading is easy, I would say that that person doesn't have anything about trading or is a crazy person. There are a few days that are not the market. That's the thing as well. When we recognize, when we acknowledge that trading is not easy, okay, we can sit back and reflect on that. Okay, if I were having good days, if I were having good weeks or good months, trading is not easy, and it seems too easy to me. So, okay, is this a strictly um, good luck? Do I have the fundamentals to keep this career, this job in the long term? Most part of the time, I mean, for me at least, the hardest thing to me was to forget. And the hardest part of learning to trade is or was to forget what I had learned. Because what I had learned was BS and all these trading strategies, bull flags, red flags, or whatever kind of flags, head and shoulder, BS, man, BS, just BS. That's not a doesn't have good odds. Nobody has a good odds of success. We trade based on those kind of things because but do if we do that, we are framing the market into a formula, into a mathematical formula, and trade. As you can see here, trade markets are irrational. Right? There's no market makes no sense. If we try to make sense of the market, we will get crazy because they make no sense. There is no 2 days that are the same. You know, I can't say the traders keep doing what it wasn't until it doesn't work anymore. Remember what happened here. I'm going to open. I'm going to open this day. Remember what happened here? We have an up day and breakout. The same thing happened here. What happened there here as well yesterday? Uh, 1, 2, 3. Of course, it's going to happen today again, right? Yeah, yeah, we are going to have the same thing today. And this is this is the reason uh, why the formula, why the setup doesn't work. It's not the same thing. It could work here, it could work here, but today, this day and this day are different kind of days. For one formula to work, everything has to be the same. Everything in the market has to be the same, has to repeat, has to be, and what's happening with the market? We have you have short time frame, we have daily time frame, we have weekly time frame trades, we have monthly time trade, we have investors, we have you know thousands, millions of minds or companies or strategies in here thinking that this is something's going to happen here. Something's bound to happen. Something's bound to happen here. For this thing to happen twice, everything here, everyone, every single head here has to be thinking the same. That's one. Two, all the participants needs to be the same. Three, all the conditions of the market has to be the same. Geopolitical, call it financial, whatever, in the outside. You know, any kind of randoms, any kind of random, and finally, random things happening here. There can be development in Russia, there can be development in China, Taiwan, there can be some bank rising interest, some other banks cutting, jobs reports going lower. You have 1,000 things that can happen. So that's why I give really, that's why I got this from Nicholas Taleb, right? He wrote The Black Swan, and this book, this fantastic book, also very simple to read, full by randomness. And this is the reason why 2 days are, the also 2 days are the same or are close to zero. It is more likely that that a lightning strike you 3 times in a row that the market plays the same way from one day to another. Now there are similarities. There's repetition. There's a lot of repetition here, but repetition with variation. I got this from Jim. These are Jim's words, and then that's true. There's a lot of repetition here. There's a lot. I call these cycles, right? We have these cycles, these intraday cycles, these daily cycles, these weekly cycles, these monthly cycles, these quarter cycles. The quarters are these expiration of contracts. There are yearly cycles as well. And there's a lot of things that we have to consider. So that's why, the odds of being successful using these strategies or expecting the market to behave in one way or the other are extremely low. And that's why, actually, the success rate of short-term traders is very, very low. Very, very low. Okay, enough of that. Okay, if there's any question, I guess I'm gonna call it a day here. Unless there's any questions or comments, please just let me know. Otherwise, I will wish you a good rest of the day and also an excellent weekend. Enjoy your long weekend. Alright, guys. See you.